Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. Today is Thursday, July 13th. This is host Richard Benuli, and we have Charles Hugh Smith. He's author, leading global finance blogger, and America's philosopher, we call him. He's the author of several books on our economy and society, including A Radically Beneficial World, Automation Technology, and Creating Jobs for All, Resistance, Revolution, Liberation, A Model for Positive Change, The Nearly Free University in the Emerging Economy, Pathfinding Our Destiny, Preventing the Final Fall of Our Democratic Republic, and Will You Be Richer or Poorer? And also recent book, Global Crisis National Renewal, A Revolutionary Grand Strategy for the United States. And his blog of twominds.com is one of CNBC's top alternative finance sites. Welcome, Charles.
Thank you, Richard. And the key word there is alternative.
Yes, exactly. Yeah, absolutely. And to that end, actually, that leveraging from that recent book that you've put together, and also many of your blog writings, we were thinking of doing the first in a series of podcasts that actually talks about some potential for positive change, maybe not necessarily now, but sometime in the near future. And the idea is to look at different aspects of finance, of the economy, of government. So, for a government system, a financial system, an economic system, a monetary system. And to that end, today, we're thinking we do a focused discussion on currency and how it ties into financial repression, of course, but also what are the adverse effects of inflation and purchasing power, depreciation, devaluation of currencies, and all those aspects. You've written many blog posts on that. Just if you could relate a few of those and some initial points.
Okay. Thank you, Richard. And I think that what I would want to start with is as an overview. A nation's currency is forced on the citizens, right? The citizens have to use it. Now, if you're a corporation or super wealthy, then you have access to global markets. But the vast majority of people are stuck with the currency that's the national form of money. And so if that currency loses value, it loses purchasing power, meaning that an hour of your labor buys fewer and fewer goods because the currency is, depreciating, then everybody loses. In other words, everybody that has to use that money is losing ground. And of course, if the currency collapses, which is, history is full of currencies that either collapse or lose most of their value, then everybody's wiped out. And so that I want to start by saying that the currency is the foundation of the economy. You can look at jobs and bond rates and the stock market and so on. But if your currency is falls off a cliff, it ruins everyone, even the wealthy, right? And so the currency is like the core asset, if you will, of the nation in terms of its economic power, right? And so the trick for the government is to maintain the value of the currency enough that it doesn't cause a collapse or a crisis, but to devalue it over time to introduce inflation, which is necessary in a system based on credit, right? Because the only way to make it affordable to borrow more money is to either drop the interest rates or devalue the currency so everybody's wages increase with inflation, but the debt remains the same. So there's a lot of moving parts to currency, and so I'll just mention One, of course, is just what the bonds that are denominated in that currency, what the yield is. So, for instance, if you have two nations and one's bonds, like Japan, yield like 0.1%, that that's not going to be very attractive if you're in a nation that has 5% inflation. And whereas if there's a bond that's yielding 10%, well, then that obviously is going to be attractive to global capital if it's considered a safe currency. In other words, that the bond won't be defaulted on. And so there's kind of a push-pull here where the currency's value is maintained by demand globally, essentially. And so if there's global demand for the currency because the bond yields are attractive, or it's considered a stable currency, or there's a lot of liquidity there, so you can use it to buy stuff, and then it's not going to lose its value in the time period you're using it. All those things go into the value of the currency. And of course, none of those have anything to do with the domestic economy. In other words, the average citizen doesn't have any control over any of those things. So this is why we, all of these things we mentioned, interest rates, bond yields, the issuance of the currency, like, the volume of the money supply and the liquidity, all those things are prone to financial repression. So, and maybe you can speak to that.
Oh, yeah, totally agree. Great points. I think basically for a while it's been the tool of financial repression as having an emphasis on repressed interest rates, right? Keeping interest rates low. Central banks have been doing that. And now it's a shift to a different tool, inflation, which is sort of a hidden tax, if you will. But yeah, it's the idea that if you do the math, if you have 4% inflation for 10 years, you reduce the burden of debt by 50%, something like that, roughly. So that's what's going on now for many years to come here, maybe upwards towards 10. I think this will likely be the method of choice for the financial repression tool. To wither away the burden of the unsustainable government debt and unsustainable government unfunded liabilities, essentially. Your thoughts on that, Charles?
Yeah, that's I think that's spot on, Richard. And that then what we have with inflation is the government wants inflation, as you say, needs it, requires it. Otherwise, the whole system collapses. But if inflation runs away from you, like you print too much currency or credit, and so there's too much money or credit chasing too few goods and services, then you get inflation that runs so hot that you have to raise interest rates, and then that will collapse the system as well. Because, of course, you make it unaffordable for the private sector to borrow money, and then the government pretty soon their budget is constrained by the soaring cost of servicing the debt, right? The government debt, the interest payments, and so these are kind of there's kind of a tricky little balance there where the government has to raise interest rates as the Federal Reserve has done, and also the central banks of Canada, the UK. I mean, central banks around the world have been raising bond yields as a way of combating or limiting inflation. But as you say, that's going to constrain their primary tool of funding all their cronies, which is fiscal deficits, right? So if you're going to borrow $1 trillion or $2 a year at high interest rates, pretty soon you're going to have to borrow another trillion just to pay the interest. And then that of course is unsustainable. So they're right now we're in this game where the status quo is advertising, promoting the idea that, oh no, inflation's under control. Pretty soon we're going to drop interest rates back near zero. Everything's fine. Where those of us who are more objective are looking at this going, we see the cost of capital rising because global risks are rising, and so capital will not accept zero returns anymore. And so that plus the decline, the deglobalization, definancialization, these are trend changes that are going to push the cost of capital up, more or less longer and stronger than that that line of thinking will accept. In other words, interest rates are not going to go back to zero. So that means that the risk of currencies devaluing overnight or having a financial crisis is also increasing.
Mm-hmm. Yeah, those are great points. You also make a point in your writing about gold-backed currencies. A lot of people look to that, as maybe the answer. But can you elaborate a bit more on that, and on how sound money could be okay, but only if it could be converted to gold, right? So, but would governments do that? Is that in their interest or not? Can you elaborate on that? Yeah.
Yeah, that's a great topic, Richard. And what I guess to answer the question or to address the idea of gold-backed currencies, we need to talk about trade deficits, because of course what happened to the U.S., which is that after World War II, it was the dominant economy, and it had basically balanced trade. It was exporting a lot of goods to Europe and Japan as they rebuilt. And then for a variety of reasons, then the U.S. started running trade deficits, and then our trading partners started demanding gold and not dollars in exchange for those trading deficits. So then that made it untenable. So that's one issue that a lot of people overlook is, if you're going to have sound money backed by gold, you kind of have to maintain a very balanced trade. You can't run huge deficits with other countries, and if you run huge surpluses, then you're going to end up with a huge quantity of other people's currencies, and that's not necessarily positive either. So it's kind of a steady state economy is best for gold-backed currencies. I do want to mention there's also a class or an economic class difference here. Is in third and so-called developing world economies, a lot of times there's a currency crisis, and what happens is the super wealthy have already transferred their assets and capital to some other nation or some other currency, or into precious metals. And so then the currency collapses, and the bottom 95% of people who didn't have a chance to liquidate their assets and transfer them into another form of wealth, they're wiped out. Then the wealthy come back home into the domestic economy and snap up all the resources and assets on the bargain, because their capital was preserved by moving it overseas. So in other words, the way that the currency system is set up benefits the super wealthy, because they're much more able to move their assets and capital around, whereas the commoner is stuck using the money that the state controls. So that's part of my answer. And then the other part is that if you're going to have gold as money, we all know what that means, because that was the way it was in the 19th century. The money is, in fact, a gold coin. and so therefore the gold is in fact the money. Now, if you have a gold-backed currency, the state controls that, the government, the central bank and the central state. Well, then once they control that, then suddenly it's that becomes the problem, because what's the peg? What's the valuation of the currency to an ounce of gold? Well, the government can set whatever it wants or say whatever it wants. But of course, the government is busy issuing credit and selling bonds and basically increasing the money supply. And so what happens if their stash of gold stays the same, and then they increase the money supply tenfold? Well, there's no way the money is worth the initial value in gold, right? So there's a lot of ways that the state can manipulate that to the disadvantage of everyone who thinks it's sound money. And one last point is, the British Empire had a lot of negative consequences, right? We all know that. But within the British economy in the 19th century, inflation was essentially zero for decades. And so what the benefit to the commoner of that is that when you do earn some money and you do save it and you do invest it, then whatever the return is actually yours to keep. You can count on that. There's some security there. Whereas if you're making money and you think your wages are rising, but your purchasing power is declining, which is what happens in the US over the last 45 years, then you're actually losing ground, even though your salary appears to be going up. And so there's some sort of deception or fraud involved, that's why we're all looking. That's why we all want sound money. It actually is the best protection for everyone.
You raise a couple of points which I think should be emphasized, and one is the idea that it's still going to get you in this fractional reserve type of system, right? That is what we have now. But in a different way with gold. But if you keep issuing credit the same amount of gold, right, you're still emulating the same aspects of a fractional reserve system with all its disadvantages. And secondly, another emphasis point I think would be how many with the means are able to address inflation through either investments or holding assets that can preserve purchasing power and things like that. And that's where they would go, right? Or it makes sense for people to go, but not everybody has that capability. So overall, is it good to say, I guess, that, a sound money system would be would be best for everybody, right? For all classes of society, because, you work, you save, if everybody were paid in gold, let's say, and you save a gold coin, that's it's going to have the same value, the same purchasing power over a long period of time as it has. Like, for example, 1 fine ounce of gold has always bought a European cut suit, I think is the saying. And so over long periods of time, you have preservation of purchasing power through gold. But in general, sound money, allowing everybody to retain their earnings, right, from what they work on, and their labor. Your thoughts on that, Charles?
Yeah, absolutely, Richard. And I think one aspect of that is kind of overlooked, I think, is that when you can plan on your money holding its value, then you have more security, and you can make better financial decisions. Whereas if you know your money's losing value, then you're really forced to chase speculation. And this is what we see now. Before we started recording, we were discussing the absurd price earnings ratios and price to market and stuff. And so the speculation actually is also really dangerous to the vast majority of people, because you think you're doing really well, and then the risk rears its head, and then the bubble pops, and so on. And so sound money is much healthier for everyone and for the economy, because then you can actually have some trust and faith in the system. Whereas now it's like, well, who trusts anything? And so everyone's got this quick, get rich quick mentality, because if I don't try to speculate wildly, then I'm losing ground, and that's really destructive, in so many ways. So, and so sound money, and so a lot of people look to gold and Bitcoin. There's a lot of Bitcoin fans who believe that Bitcoin is digital gold and so on, because of its limited supply. And so those are possibilities, but I don't. I'm not sure that that's a wide enough spectrum
Yeah.
of possibilities.
Right. This sort of leads us into what would be our suggestions or recommendations for a better system, which may not be implemented now, but at least what we're going to do in these series of podcasts is write down what our suggestions are, what are our thoughts for different aspects of the system, right? Financial, economic, government, all these aspects. So in this case, for currency, yeah, what you're saying now that a suggestion would be some competitive currencies, right? More than one, like okay, maybe gold, maybe Bitcoin, and others as well.
Right, Richard. I'm suggesting, and a lot of other people have suggested this and been advocating, like a spectrum of currencies. In other words, you could have privately issued currencies that were either backed by commodities or backed by scarcity, and then you could have community-based currencies, which would be, say, for example, if there was a network of small community banks that were able to issue, credit and currency on their own, then this was extremely powerful in the 18th and early 19th century in America, because there was not enough money and there wasn't enough credit. And so if you make that community form of money available, then you can expand your economy, because average people have access to credit that was more or less reserved for the rich. So I like the idea of competition, because then the marketplace, if it's transparent, the marketplace will decide and price the relative value of any currency. And so there's a lot of talk about a BRICS issued currency. Well, that would be great. It would be great if we had access to a BRICS issued currency and it traded on the global marketplace and anybody could buy it, online and exchange currencies. Then that competition would, of course, weed out the weak currencies and reward the positive ones.
Yeah. Competition is good. It makes things more efficient, and that it would bring in the natural forces in to help in that process. Yeah, totally agree. So you're saying your suggestion would be more private-based currencies, or currencies that are issued by entities with no conflicts of interest, we can say, right? Like, because if it were government, they have some type of conflict of interest in the sense that they have a political agenda and they want to be able to control the fiscal policy, right, through the currency mechanism for whatever political gains, political advantage. Would you say that? Yeah.
And I like my pet project, which is most people dismiss as pie in the sky, would be a currency that was issued with labor backed. In other words, for all the people that a large amount of labor in our system is not paid. And because it's not profitable, or the government doesn't pay for it. But you could employ a lot of people or pay them for the work they're already doing with a currency that was backed, basically issued for their labor. And this would be a way you could say, well, how do you control inflation? Well, there's only so much human labor that can be generated. In other words, it's not infinite like fiat currency. So I think that, again, it's a form of stimulation by introducing money that people can use that's not government controlled. I would say this is a community form of government. Now, you could say that that's not backed by anything, but I think there's a role for currencies that serve that liquidity in local communities. And you could say, well, they're being they're prone to inflation, but if somebody's using it to help themselves start a business in the here and now, some inflation is okay with them, because the option is they don't get to have any money at all.
Yeah, exactly.
So not everybody can buy Bitcoin and gold, right? So if you want to reduce poverty, you've got to be able to funnel new money to people who are being productive in their own local economies. So I see that as a place. There's a place for all kinds of money in a transparent market.
Yes.
Yeah, that's what I advocate.
That's very interesting. And I think this goes along with other aspects that we'll be talking in future podcasts, the concept of local solutions, decentralized solutions. And this will apply to like environmental systems, for solution, instead of having a centralized body like the Soviet Union did and all the disaster they did on the environment. It's better for decentralized local solutions that, where the community knows the problem, they know the issues, they have a better solution overall on what to do. So, yeah, this is, so your suggestion for the currency is very aligned with that, the concept of community-based currencies.
Yeah, absolutely. And as you say, they can't be, if it's truly a community-based currency, or it's a private currency issued, backed by some commodity. It can't be hijacked by the cronyist system that controls the political system.
Mm-hmm.
And that so who controls the currency? And it as you say, if it's controlled by political interests, then of course it's being skewed to serve those interests. And the idea that we're suggesting is currencies that are neutral, that don't have a political agenda, that are just used as money, as stores of value, and to grease transactions. And so that freedom from centralized control is like a key of the currencies we're talking about.
This has been great, and this is totally aligned with all the books you've written and all your blog posts. And so, yeah, this will put this as the first in a series of podcasts that we'll be doing on what our suggested characteristics are. And a lot of them come from your writings in the books that you've put together and in the blog posts. How can our listeners and viewers learn more about your work?
Yeah, please visit me at of2minds.com. Free samples of all my books are there. And yeah, Richard, I think your summary is excellent. I look forward to our future discussions.
Awesome. Thank you so much, Charles. Thank you.
Oh, thank you.
Yeah, we'll look forward to those discussions. Thank you.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.